Okay, so let's understand the current solution. But before moving on to the solution, we will understand the accounting equation. Okay, that will help us to understand the derivation of the correct choice. Okay, so it is assets minus liabilities equals to owner's equity. Okay, let's say suppose you have a business of furniture. Okay, so you have sold the furniture. So you have sold the furniture to your customers of, let's say, $1,000. Okay, now what happens whenever you will sell the furniture to your customers, the customer says to you that they will pay you off later, like in 1 month or 2 month. Okay, so if they, so whatever the amount they will pay you off later, that becomes recoverable from the customer, and whatever will be the recoverable amount from will be, those amount will be considered as assets. Okay, now that is very clear to you. Whatever you have to recover from your customers, those amounts will be considered as assets. Now what are liabilities? Liabilities are the amounts for which which you have availed benefits or services. Like suppose for producing furniture you have to purchase wood logs from the suppliers. Okay, who deals in cutting the trees from the village, from the forest, and providing the wood logs for producing furniture and wood made products. Okay, so you also have purchased some raw material from your suppliers, but you have not paid them. So let's say suppose you have not paid $500 to your suppliers. Like you have to pay $500 to your supplier in 1 month time or 2 months time. Now what happens? Whatever will be the payable amount will be considered as liabilities. Okay. Now at the end what happens? Though so what happens? There is a $500 of owner's equity. Okay. So we have understood the meaning of $1,000 means assets. We have understood the meaning of liabilities. And at the end, what is this? This is the takeaway of whom? Take away from business. Okay? Take away from business. Like the owner will take away $500 to his home. Now the question has asked us, you have understood the meaning of assets, liabilities, and owner's equity. So the accounting question is now clear to you. That what is the meaning of owner's equity, liabilities, assets, and how we will form the whole accounting equation to get the meaning, that what amount will the owner will take away from the business to his home. Okay, now we will come to our main question. Now what happens, let's say suppose you have a you have again a business of selling furniture to your customer. Okay, now what happens, let's say suppose you have a bad customer. Okay, and one other business owner is having a good customer. So you both are friends. Now what happens, you say to your friend that please let's exchange the customer receivables. Now what happens, you will have, now after exchange of the assets, because a recoverable amount from the customer will be considered as assets. Now after exchange of assets, You will have the good customer and your friend will have the bad customer. However, the customer amount would will still be $3,000, not $3,000, $1,000 only. Okay, okay. So it was $1,000, and again it was $500. So previously it was from bad customer before exchange. Now after exchange it was good customer, but still it is now $1,000. Liabilities are still $500 from the previous example. So what will be the owner's equity? $500. So our question says that it will not make any difference to owner's equity if there will be an exchange of asset for an asset. Okay. Now we have understood the count equation and the effect of exchange of asset for an asset on the owner's equity. Okay, and now what is the actual impact? So there is no impact on the owner's equity of exchange of asset for an asset. So what is our correct choice for the problem? Correct choice is B, that is may have no impact. Okay, may have no impact on equity. Okay, so you need to write down the first sheet as well as second sheet onto your notebooks for better revision. However, the correct choice is choice B. That's all our solution. Thank you.